Hi, Phil Iverson here in Chicago. A cold February day, just about a third of the way into tax season. Rental properties are one of the most common parts of a tax return. Many people have a house that they rent out, or a condo, apartment buildings. Sometimes there's commercial property, and a lot of times people have questions as to, what's the best way to handle the return. Now, as far as depreciating the property, that is something that gets set up in the very beginning of the tax return. For example, if you have let's just say a condo that you rent out. The condo was $200,000. You're not allowed, of course, to write off the whole $200,000, but you take a little bit of that every year. And let's just say that it's 3% per year. So on a $200,000 property, your depreciation expense would be $200,000 times 3%, $6,000. To that, also deductible are any mortgage expenses, real estate taxes, any maintenance fees, condo association fees, basically anything that is necessary to rent that property out is deductible. When you get into land, aspects of land, land is actually not a deductible item. The way the tax returns are set up, the way the properties are set up, when you get a property, you have a base price, and that's a contract price. By the way, on those contracts, there's a little bit of calculation that goes into that, because you've got lawyers' fees, maybe closing points, all kinds of transfer stamps. There's quite a number of things that should be added to your cost basis of the property. But as to land is not a deductible item. The theory is they're not making any more land, and land is going to be here forever. It's not going to depreciate. It'll probably, if anything, appreciate. It'll go up in value. So commonly what people do is they'll take their property and they'll assign a certain percentage as to land. Let's say it's 10%. So in the example of before, if you've got a $200,000 condo, technically you should take a small percent, or whatever the fair percent of land off that, and then the rest you can depreciate. Now, if you've got Airbnbs, all those management fees, website fees, advertising, stuff like that, they're deductible. And of course, you do have to report all of your rents, but you want to deduct as much as you can to lower the net income, and that'll make the tax bite just a little bit easier. Anyway, there are quite a few things involved in rental property tax returns. If they're commercial property, it's a different type of depreciation than residential rental property. So, that's in the depreciation tables. But I just wanted to touch on just a little bit about rental property, and hope your tax return is going well this year.